You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for a little program we like to call around these parts Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. Quite a few programs for you guys to choose from. Maybe you're into the asset manager world. You like the advisor's option. Maybe you want to do some more. You're more in the active retail side. You want to hit the option block. Maybe your basic retail options bootcamp. Maybe it's like your daily news, options news rundown, or a whole bunch of others. Wide world of options. This week in futures options coming up in about an hour and a half here on the old network, going into the dark side, the commodity side, crude vol, gold vol, all that exciting stuff. Options Playbook Radio to kind of break down a lot of options plays you could use, and so on and so forth. A lot of great shows for you guys to find. Of course, you guys can get them pretty much wherever you find this program. Just make sure to listen to this. You subscribe to the whole network on your platform of choice. Of course, you can always go to our website or grab our mobile app. It's all there as well. And of course, you can always join us live for this program every Friday, noon Central, 1 p.m. Eastern via Mixlr, M-I-X-L-R. Just grab it once, set it, and forget it. If you want to follow us in Mixlr, then, of course, you'll be notified when we go live for this show, for TWIFO in about an hour and a half, but also Option Block throughout the week, and a lot of other fun surprise shows that we do throughout the week. You never know who's going to come in the studio here. We had a lot of great guests in the crypto world this week coming through here this week. So you never know who's going to come through here and crack a mic, and we'll start chatting. So if you follow us in Mixlr, you never know what's going to pop your way, which is kind of fun. Of course, however you listen live after the fact, make sure you hit us up. Questions, comments, insights, pearls of wisdom. We do, yes, we do like to hear from you guys. And joining me out there, it's been a little while since he's been sitting in the old Vol Views hot seat. You know, the Greasy Meatball's been kind of hogging it, but we booted him to the curb, a.k.a. Michigan, and we rotated in the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com by way of the land of Maine. Mr. G, welcome back to the show, sir.
It is a pleasure to be here. Well, if I'm here, that means Mark is what? I think he is buried under boxes at a Costco.
Yes, he's stuck. He is stuck in a Costco somewhere, lost in the fava beans aisle, trying to choose between red beans or black beans and fava beans, and he can't make up his mind.
And a nice bottle of Chianti.
And a nice bottle of Chianti, indeed. We always make allusions to Silence of the Lambs here on the old program. Great film. All right, and also joining us in our little guest seat today, he is a newcomer to the program and indeed to the network. He is David Lincoln, the host of the Short Vol Show. David, welcome to the Volatility Views program.
Well, thanks so much for having me, Mark. And hi, Andrew. How's it going?
It is going well, Du. Now, I called David by Du because that was his CBOE acronym, and there's no way I could ever change that because actually it was probably one of the best. It was one of the most accurately named acronyms ever because he was the dew.
The dew, like the fresh morning dew. Is that what you're getting for?
You could say that, or
your money is due to him. He's like the collector,
dude, like a little for duder. I don't know.
Oh, okay.
Could, It's
I was a little hippied out back then. I have to say, a little hippied out.
It was hard to get him. It was hard to get him riled. Tough to get Dewey riled.
That's a handy trait to have when you're down on the floor of the CBOE. Well, David, as we mentioned, the Rock Lobster's on. I know he's a fan of yours. He's almost single-handedly responsible for edging me to get me to come on your show a few months ago, which was fun. Of course, we did your interview show, and he's been needling us to get you on the big show, the Vol View show. So we thought it'd be a fun time to rotate you on. But David, it's your first time on our network, so for all of our first timers, why don't you go ahead and give us an overview of your background? Obviously, we just mentioned you were a market maker, so give us a background in kind of the option space and what it is you do now with the Short Vol Show. I think the name kind of says it all, but maybe there's some other stuff going on there.
Sure. Well, I was a CBOE vet, as you two were, and coincidentally, both Andrew and Mark and I all worked for Group 1 at one point or another. I think Andrew was in the door first, and then I was in second, and I think both of us had left by the time Mark showed up, but we're all veterans of that one trading firm. And as the floor, settled down a little bit as far as individual market makers in the pit, I went on to other things, but, as trading tends to do, trading pulled me back in about a year and a half ago, and I looked up Andrew and saw he was doing stuff, and I started a little show online. And I started out by interviewing people like you, which it's a pretty small little industry, and I've had a great time interviewing people, and I've really made it my specialty to just check out the VIX term structure every day and get into it every day about what's happening specifically in the VIX term structure and in UVXY. So it's great to be here today. It's a huge honor, and I'm really excited.
Well, I'm glad to have you on, and you're right. It's a fun thing to get into the world of hosting an interview show. I've done a few myself over the past decade or so, and it certainly is. I think once you start doing it, you realize there's a certain skill to it, and it's perhaps not quite as easy as people make it look on TV when you're watching it, but it's a fun gig. I like it. Sounds like you like it as well. And I think everyone likes volatility, so let's keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, that music means it's time once again for the Volatility Review, the portion of the show where we do pretty much what it says. We look back at the week that was and indeed still is from a volatility trading and trending and analysis and unusual activity perspective. As we're kicking off the show here, we're a little bit past noon central here. We're seeing the markets kind of in a gentle move upward. It's been about a week since we kicked off this whole trade war thing, and it's been pretty much a nonstop rally. This is probably one of the lighter rallies we've had since the trade war officially commenced last week. Most of the major indices up fractionally percentage-wise on the day. SP up about 0.2%. Q slightly less. The Dow slightly more percentage-wise. And VIX Cash taking another break to the downside, down to about 1233. Well, let's see. Let me look. Before we go any farther, let me just pull up my prognostic here. Oh, I'm 1250. I don't know. I'm liking what I'm seeing here. Mr. Meatball was ever the optimist up there at around 1290 last weekend. I think Bill Valentine, our guest last week, he was at 1363, so far more optimistic. But my aggressive fading of vol looks like, at least so far, maybe we'll end the show now. That'd be good, and then I can declare victory. But no, we got a lot more show to do. Let's kick things off. David, you are our guest, so we'll give you pride of place here on our Volatility Review. What caught your eye this week from a volatility trading and trending perspective?
Well, like you said, it's just been a continuation of the rally. Of course, the VIX being a derivative of the SPX, and the major indices up towards the highs, and consequently, the VIX in. Now, it was only a week ago where we were, or a week and change, where we were up almost to like the 17. So we've really come off from there. But contango has been building since the Vomageddon. This is pretty much the highest we've sustained. It looks like we topped 9% contango today, and it just seems to be a story of the slow rally, like you said. I did notice some size buying of out of the money calls across VXX and UVXY recently. And I think that's just people, sort of buying their wings, as we would say on the floor, protecting their upside. But I haven't seen a huge amount of volume, at least in UVXY, but just a nice continuation of the term structure looking very healthy here.
And you mentioned you focus a lot on UVXY and a couple other products. Why is it that you zero in on those the most? Why not maybe, shorten VIX Futures or something crazy?
Well, I started out by, I was looking for something interesting to trade, and I started looking at those 3 times leveraged ETPs because I was thinking of trying to somehow capture the decay with a 3-time leverage thing. And I ended up with UVXY. Now, UVXY, as many people know, has been, nerfed or deleveraged after that Vomageddon in February. But it still is a leveraged vol product, and that creates a little bit more excitement, I think. And it also has options attached to it. If I could, I would trade TVIX at this point since it has more leverage, but there's no options attached to that one. So not as interesting to me.
Yeah, our old friend TVIX, one of the first VIX ETPs to really just to have go through a debacle, and we thought would be delisted, but nope, it survived, and people continue to trade it up to this day. And it's funny, it shows kind of how devastated, shall we say, the levered VIX ETP world is, where TVIX starting to look like a good option again amidst the wreckage and the shelled remains of the rest. We'll get into some paper and what's kind of catching our eye out there in UVXY in a little bit. But first, Mr. Rock Lobster, like I was saying, it's been an impressive bit of rallying ever since the trade norm. We were joking, on the option block. This has been a complete sell the rumor and then aggressively buy the fact type scenario where we've been selling off for months now off the rumors of this impending trade war. We get to last Friday, it becomes real. China fires back and forth salvos on the trade war. And what do we get? We get pretty much a week of nonstop rally, 1% a day or close to it, today being kind of the laggard of the bunch. So it's been a bit of a weird one. What's been catching your eye in this week from a vol perspective, sir? And also, are we yet in zone -6 for VIX yet?
I knew you were going to go to -6.
What can I say? It's my favorite zone of the VIX land.
Where we are is zone 1, the zone we have not been able to stay in for a week yet this year. So I tried to put together a trade yesterday. Some of our guys for our vol newsletter were able to put it on, which would be kind of a quickie break out of zone 1 trade, but still leaning on the term structure for July. As far as will we stay here, I don't know, because all you need is like a tweet, a trade war tweet. We break out of it. One thing we did in our platinum class is just kind of showing people relative vol. So, for VIX to be around 12.5, you need 30-day volatility to be in a certain place, right? So at the money, 30-day volatility in the SPX, I believe, is like 9.5% right now, right around there. So today is the 13th. We're looking like those weekly August options, and you're seeing volatility around 9% at the money. So 12.5 VIX gets you around, depending what the skew looks like, 9%. So for us to get back to a 9 VIX, we need to see that 30-day vol get down to like 6% at the money, which is a pretty damn long way to go from where we are right now. So you're looking at 9%. We would need to see maybe 6.5–7%. Huge drop in vol, because right now the 2800 straddle is $58, $59, which is, let's call it 2%, 2% move for the SPX. So for it to really be a whole lot less than that for 30 days, and that's what it was trading at in October, November, December. So to get into zone 1 and stay there, the people have to start chipping away and really hammering away at some puts in the SPX to get that vol down there. So nobody has been willing or able or wanted to do it so far this year. So I think from here, any bleed for VIX is going to be really slow. Like, 12.5. So you might get in a pin for your crystal ball. And I would be surprised if it's less than 12.25 by the end of next week. It's very hard for it to go down at this point in time, because we need people to start hammering away at that stuff. And, you get a 0.75% move or a 1% move for one day, and, that takes care of VIX where it is. So, the short vol trade now is just an erosion trade. I don't think there's not a lot to really harvest from the VIX Cash to really make all those products go down. It's sort of, just that you've got high contango, you've got erosion, and it's just sort of, it's a watching paint dry on the downside trade, I think, at this point. Doesn't mean it can't make money. It's just, we're, like I said, I've got zone 1 is there for a reason, and it's just those dollars to pull out of VIX are hard to buy at this point.
You just alienated half our audience, sir. Poor Davies from the Short Vol Show. He's crying right now. Listening to you talking here. Saying
no,
crazy.
Actually, I do agree actually with Andrew on that one. And the unique thing with UVXY right now is that it's such a low price. The actual price of it is below 10 now, and so there's just not that much meat on that bone in the options. Like Andrew said, we're kind of pretty much bottom feeding from what the VIX right at this moment. And B, there's not just that much meat on the bone for this product. Once it splits, eventually there'll be more stuff to do. But you could wait for a pop and then maybe play a pop in it. But to initiate a short position right here, there's other better uses for capital, I would think, in the marketplace right now. I mean, it's like a slow grind down, but that's all you're going to get out of it. I totally agree with Andrew on that one.
That's coming from the man who hosts the Short Vol Show, saying other better uses for capital. So there you go, listeners. I know there's a lot of you diehard Short Vol crowd out there. Maybe if you got some on, keep it on, but maybe you don't go super hardcore, levering over super, trying to get that last couple of ticks till VIX heads into negative zone 6, which Andrew's redoing his zone chart. He'll have some negatives in there soon. Another thing we like to watch here on the show here, of course, is our old friend VVIX, aka the volatility of VIX itself. And as you might imagine, it is still fairly elevated, actually hovering right around almost exactly at 100 right now. It kind of has this nice little range where usually a decent floor when things are pretty tranquil is around a 75. Starts getting north of that, 95, 100, when things start getting a little bit more turbulent. When it gets way over it, we were talking about it last week here on the show, kind of what percentiles VVIX has been in, topped out, I think, around 114 not too long ago. That's when things are really starting to move. Obviously, if we settle out here, like Andrew's thinking, maybe we slowly kind of grind south a little bit. We'll probably expect to see VVIX coming in. But Dave, is this a tool you guys use a lot over there when you're looking at your short vol trades? Do you analyze VVIX a lot, or is this not something you pay a lot of attention to?
No, it's definitely something I watch, and I kind of interpret it as like an indicator of sort of the options flow in the VIX, like what people are doing in there to some extent. And but it hasn't been that significant lately. I mean, it got down after that Volmageddon thing. It was down in like the low 90s for a while, like right before we were turbulent again. So I think maybe if it gets to the extremes, it's something to be a real indicator. But when it's just hanging out around 100, it's not that meaningful to me here and doesn't really help me that much.
What does help us a lot is, of course, the VIX Futures term structure. Dave alluded to it earlier. Right now, as we're sitting right here with the cash right around 12.33 or so, the front month future is about 0.8 handles north of that, and going out 2 months out to the AUG future, you got looks like about 2 handles worth of juice. Dave, you were saying that the tango is shaping up now to be similar to what we saw going into the Volmageddon back in February.
Well, it's getting closer. I mean, if we see 10 again, that seems to be a big number for me. Now, remember that number is the amount that these things are going to lose value in general per month. So that's per month. So it's an important thing. It doesn't affect minute to minute, day to day, but per month. And I like to think of that area. If you were to envision the chart of the upward sloping chart of the futures and then the spot underneath it, the area between those futures and the spot is sort of your potential to make money on these things. And as that area gets larger, there's more potential there to make money off of contango. So right now, things are decaying a lot. if we start to get, one day up, another day down, another day up, another day down, that will also add to the decay. So, yeah, I mean, it's getting more interesting. But like Andrew said, the actual VIX is in a pretty low zone right now. So there's not a whole lot of room. But, yeah, contango is definitely shaping up. And that's an indicator that, that people feel pretty comfortable in the markets right now, I think.
Shaping up for a nice, steady, slow, as Rock Lobster alluded to, erosion of all of our favorite products like VXX and others. At least I know a lot of our audience is open for that. As we move on to the mothership, the big VIX options. As we alluded to, kind of a light week out there. The ADV right now hovering right around 487,000 contracts, so a bit shy of the 500,000 point. Usually it's around 600K or so, so we're getting in that light season, that mid-summer season here. And right now, so far on the tape, we got about 280 some odd thousand contracts on the tapes. Looks like may hit the ADV today, maybe even not. Light day. Everyone's already heading out for the summer weekend out there. Everyone's maybe watching some of the Trump speeches out of England to see if that would maybe drive something. And so far, not so much. The rest of the week kind of has been a similar story. Thursday, 314,000 on the tape. Wednesday kind of being the hot spot of the week, about 617,000, so a little bit north of the ADV there. Tuesday, 596,000. Monday, 485,000. Right now, the call to put out there is about 2.8 to 1, so kind of about where it's been for the last few months. Nothing too explosive up there. I know people who watch that. I tend to start paying attention when it gets a little bit north of 4, let's say 4.5 or so. That's when I start paying attention. Anywhere in this range is kind of just par for the course out there in VIX land. In terms of what was lighting it up out there, what are the top 10 hot VIX option strikes out there? Well, number one with the bullet is July 25s. Talk about how much love there is for the 30s, and we'll get to those in a minute. But right now, the July 25s topping our relatively light list this week with 197,000. Usually our number one going to be 400, 500, 600,000 contracts. OI kind of light right now, so top spot goes to a little bit shy of 200K, the July 25s. Number two, the AUG 30s. Remember I mentioned people just love that 30 strike. 183,000 contracts open. Number three, the July 30s. Again, more love for the 30s. 177,000 open number there. Number four, the AUG 28s. You can't, if 30 is a bridge too far, why not 28? So the 166,000 open there. Number five, our first put on the list, the July 14s. $1.56 on that strike. Number six, the July 28th. So 30s and 28s. I'm seeing the pattern here. 155,000 open there for number six. Number seven, our second and final put on the list, the July 12s, $1.54 open there. Number eight, the comparatively reasonable AUG 20s, 152,000. Number nine, the July 29s, just that 28 to 30 strip is just capturing the imagination. 142,000 open there. And rounding out our top 10 hot VIX strikes, the actually very reasonable July 17s with 140,000. Total of about 7.9 million contracts outstanding. So again, pretty light on the OI. About 5.8 million on the calls and about 2.1 million on the puts. Mr. Rock Lobster, maybe we'll start with you, sir. Anything catching your eye out there this week from a VIX options activity perspective, sir? It's kind of a light week.
The thing that looked most interesting for, at least from my point of view, is how there's still, there was, but it's starting to give it up now, how much juice there was in the July future. Because, so what happens is, VIX is, the VIX cash is sort of following the market, following the SPX. We're kind of gently rallying now. So vol starts to drop a little bit, and the future's like, okay, we're going to keep it here. We're going to keep the premium in because of the tweet factor. So that was one of the at least bigger things. But from a volume point of view, I'm not seeing a ton, but I'm also not what I'm not seeing is like a ton of put buying yet. Like nobody's looking for 10. Let's put it that way. I think the biggest story is, to be honest, is I just think the lack of hardcore downside put buying, and like the weeklies and stuff like that. There's just, I don't see a ton of it. So there's not, there's just, you would think, if everybody thought VIX was going to crater, there would be a little bit more activity in the put buying. But but there really isn't. However, like an interesting put to me is like, okay, the August 0112 puts are worth around 20 cents. So you look at something like that where nobody's really buying them, nobody's really selling them. You would think there'd be, people would be doing kind of a line in the sand at a 12 VIX. You get 20 to 25 cents for those. You generally can use that kind of juice to buy upside calls if you're looking for a pop. And there isn't anything in those. Even like the 12.5 puts you could sell maybe for 40 cents. So there's not the activity that I would expect from people, either one, looking for more of a pop from this level, and they're certainly not buying a bunch of weekly puts looking for VIX to go a lot lower. So just not any real directional paper. So it's mostly it's the lack of stuff that I find more interesting than what's actually been, what you just identified, what went on the tape lately.
Yeah, you're right. I mean, look at our top 10 strikes. Only 2 real puts on there, the 14s and the 12s. A lot of those 12s actually lighting it up this week. We saw about at least 40,000 going up on the 10th. So earlier this week for about 12 cents. So I can't tell if those were, I'll have to go dig in and see if those were opening or closing, but those were a little bit off the offer there. So it looks like they were paper buying those up. So it could be some very, very near-term downside specs. But you're right, we haven't seen a flood despite the fact that VIX has been eroding somewhat aggressively over the last couple of weeks. I haven't seen a flood of downside paper, and certainly not seeing that now. You're right, looking for that next move into the fictional zone, -6, aka down to the 10 handle. Dave, are you kind of seeing a similar thing where out there in the paper you're not really seeing a lot out there that's showing you people are really prepping for another aggressive VIX down move?
Yeah, I was just looking at my time and sales, and I see 20,000 19 SEP 14 puts going across the tape for $1.38, sort of mid-market. It's really hard to tell what they're doing there. Most of the stuff just looks like cheap upside units people are buying to protect stuff for cheap. Is this a point where? When's the point when it would be appropriate for me to comment on that 1 penny trade that you've been talking about so many times before?
We'll get to that in a few minutes. Out there, the VXX trade. Yeah, we got people actually hitting us up in the chat about it right now. People are hitting us up about it on Twitter. So we'll get to that. Everyone's fascinated by those VXX Jan 10 puts. We'll get to those in a minute. I was just looking here. You're right, at some of the paper going up out here in VIX land this week, and I was kind of joking in earlier weeks that maybe it is kind of VIX, kind of counter to the trend of erosion. Maybe it is a bit of VIX bullish risk reversal season. We did see some of those continuing to pop up this week. Small, not huge size, like we saw 5,000 lot of the SEP, so a little bit longer term, 1327 risk reversal. And I would probably, I'm looking at here again, this is a lot of this stuff again. That's the thing about VIX, a lot of institutional paper, very well executed, splitting the uprights there. So sometimes at first blush, it's hard to tell exactly what they're up to. But if I had to wager, I would hope at least that that's probably a bullish. If they're selling, if that's a bearish risk reversal, that might be kind of interesting as well. But still interesting things there. Kind of risk reversals have been popping up a little bit there if there's been any kind of trend. Haven't really seen the resurgence of our old friend, the short 1x2 out there in the call side for a lot of reasons we have already discussed. And now we can move on to our topic du jour, the product everybody loves to trade, including you guys over there on the Short Vol show as well. Our old friend VXX continues to give the gift of erosion, and it's happening again this week. It's right about 31.8 or so right now, right about 3 handles lower than where it was this time last week. So a lot of, shall we say, aggressive erosion kicking in over there on VXX land. And VXX averages, about 200, a little bit more than 250,000 contracts a day, about 266,000. And most of this week was fairly light. Today's about $1.50 on the tape. Yesterday, about similar numbers. Wednesday, about 189,000. Tuesday, the heavy day of the week, 274,000 contracts. Monday, 205. And Dave, if I had to, I asked this to the meatball every week, and somehow he gets it right. It's amazing how he does this. But if I had to ask you, sir, if you had to pick right now, the number one sizable, by an order of magnitude, number one size options position out there in VXX land, what do you think it is?
Oh, I'm not going to get this right at all.
I'll give you a hint. You just mentioned it.
Oh, okay. So the Jan 10 puts.
Yes, there you go. 203,000 of those are open right now. They're the biggest thing by far. Actually, though, that July vertical is not bad. It's at 100,000 for the 90s and 70s. So there are some calls on the tape. But Dave, a lot of our listeners are fascinated by this trade. They're pointing out there's some penny bids out there. I'm sure it's probably the meatball buying them from Michigan right now, Andrew. But what are your thoughts on these puts that continue to just thrive?
Well, Andrew will like my response for this question because he taught me some of this stuff. But I would never frown on somebody for buying something for a penny. No matter what it is, you could do something against it at some point, possibly. On the other hand, anybody who's selling something for a penny should get their head examined, I think. So, I don't have anything negative to say about anybody who wants to put a few of those in their pocket. I personally would lay off myself because I'm not interested in them, but I would encourage anybody who's interested in trading options, if you're interested in something for a penny, just go for it and worry about it later, because having a unit out there can be very valuable at times, and you just never know.
Yep, as market makers, we're all trained to love ourselves some long units, and that's pretty much what we got going here right now. I'm gonna skip ahead actually to bring in a couple of the comments from the people on these puts, because we've been getting hit about them all week rather than waiting for the vol voicemail on those. Where we got people, Nils wanted to know if Mark ever got filled on his penny bid. Spoiler, yes, he did. He's bought a lot. In fact, whenever I see a bid out there for a penny, I just hit Mark up and say, "Is that you?" Because I just joke, because that's his go-to. I'll admit I got a few of them in my back pocket as well, but it's just a fun one. We've got people actually here in our chat right now saying ZC3HC2, who by the way is a big fan of the Meatball and Dave as well. He's really excited to see you guys on the show here, and he said for a moment yesterday there was a penny bid out there as well, which probably was Mark. So, Mr. Meatball, has this been Mark buying these things up?
I think we're done. We have all we want, and because basically that $10 is the theoretical low for VXX, with all the, if you had kind of like the full curve and you modeled it out until January, that's about as much as you can make on, now if we have extended period with VIX really drops, we get a lower VIX, we could see lower than that, but right now that's about where it is going to go. So it's one of those things where, and if we get any kind of a move, yeah, they might move to 4, 5, 6 cents or something like that. But right now that's about it. So that is the trade, and I think we're done on them at this point.
So you guys are filled at roughly 20% of the OI.
Right, and plus you get to put them on the pay exchange, so they actually pay you 40 cents to buy them. So you're not even paying a penny for them; you're actually paying a fraction of a penny. So, but I think at this point we're done.
We got Pete Yarborough chiming in saying, "I'll never get to greasy meatball levels, but I did go on an Imelda Marcos buying shoes style buying spree for penny VXX Jan 10 plus not too long ago." So we have inspired the masses, maybe scarily so. I don't know, Mr. Rock Lobster. We'll answer some of these, because that's so many of these questions about these puts. We won't even save them for the mail. We'll get some of them now. Vixland, he was confused by all this. He kept writing in, as we were talking about these last weekends, people were writing in about him saying, why would people buy these puts? Why would these puts gain value? VXX never crashes down. Please explain. Love the shows. Keep it up in big caps. So we will keep it up there, Mr. Vixland. All for you. We were going to shut it down. Then we decided, no, let's keep it up. Vixland likes it. Thanks for the love there. But this is kind of a question some people have, which is, you kind of just laid it out a little bit there, Rock Lobster. I don't think anyone expects, VXX to go roaring down to the 10 handle anytime soon. But we have seen before, if this thing starts to drift south, those puts could catch a bid. And that's pretty much what you're hoping for, right? You're not hoping for these things to go 3 handles in the money. You're hoping that'd be nice, but you're hoping for, a nice 6 cent to 10 cent move, right?
Something like that. And it's what, like I said, if you get a sharp drop in VIX now, all of a sudden things start to change, and you get a bit of accelerated decay for VXX, because they're holding futures at 13 and 14 and a half, and if you see 11 on a percentage basis, that's a pretty huge move for the futures. If they all of a sudden, you have a $14 future, $14.50 future, that now could drop $2 or $2.50. So then all of a sudden, percentage basis wise, right now, remember, VXX is holding a ton of August. So if you do have VIX crashes down to, which we really haven't seen this year, but when I say crash down, 1236 to 1136. So what you have to remember is all the proportional moves now in VXX, when you have a 1.5 handle move in VIX, which is right now relatively enormous, that savages VXX because the product is holding all of these futures at a $14 level. And if the new handle's 11, now that's a 20% drop in the value of all the stuff it's holding. So, 20% of VXX currently, that's a pretty big number. All of a sudden you're talking, $5-6 or something like that. So like, boom, all of a sudden that's the next chunk down. So it is possible to do it, but mostly is, like I said, you just estimate the daily decay. You take out the weekends and you say, okay, this can decay down here. Possibly it can get to 10 by then. Just look at how VXX performed last year. Obviously, one of the great short vol years of all time. You're like, wow, that thing really can go down if it wants to. So it can do it. Will it do it? Because you know how great the crystal ball is every week, except apparently for Longo. But so it can decay down there.
Hey, I've been crushing it lately. Last 2 weeks notwithstanding, I had some scary bullseyes there for a while there. So
you did. It was a little scary. So I would say the 11 handle could generate quicker moves for what VXX is currently holding. So, and then you might get a little bit of a pop. Probably if you want a shot for options that have a better chance, the 15s or 20s. But I know it's hard to believe, but those could be $5 or $6 in the money by January. So I know, again, it's all goofy stuff, but that's the way the product works.
Speaking of goofy products, Dave alluded to it earlier. It doesn't get much goofier than the remains of UVXY. We talk SVXY a lot on the show, but lately UVXY has kind of been getting a lot of love. In fact, a lot of you guys hitting us up with Bloomberg. They've been writing some weird pieces of late. I think they're the ones who wrote about that $75,000 trade for that VIX fund the other day. But they've been writing a lot about UVXY, and they have an article came out, I think yesterday. A lot of people were sending it to us saying the VIX ETF love affair endures as volatility falls, talking about all the inflows going up in UVXY of late, $308 million in net inflows, 70% of that since July 3rd, so just in the last week and a half or so. And let's see, not a single day of outflows out there as well. And a lot of people saying that maybe they think this is retail, at least according to this article, retail specking on upside in VIX, which would be interesting. Because they think retail are biased long VIX, which could be, but again, we saw in the vol apocalypse just how far and widespread the short vol trade was out there with your proverbial grandmother in Iowa. Some of them hit us up and said, I had a ton of XIV out there. What do I do? So the short vol trade is perhaps a little bit wider spread than people think. And I'm looking here at what's been lighting it up out here in UVXY. It's still the Jan 1 puts, the top options position, UVXY, a little bit neutered than what it used to be pre-February. Looking here for some interesting spots. There are some calls lighting it up. The Jan 30s, number 3, about 20,000 open there. Jan 75s. Those are probably, I think, a legacy position, shall we say, to be charitable, with about 13,000 open there, number 5 on our list. The Jan 60 is also on number 9 with about 12,000 open. Dave, you're probably the biggest fan of UVXY here on the show. A, did you see this piece in Bloomberg, and what are your thoughts? And then B, what's catching your eye in UVXY land these days?
Yeah, so I did see the piece. And I think it's really hard to decipher who it is that's actually buying all this stuff. I think a lot of retail people see UVXY as a lottery ticket, like a scratch ticket, really. And they say, oh, maybe the market will crash tomorrow, and they jump on board for a little while. And, this sort of speculation made a little more sense right after the Volmageddon when we were in either backwardation or very flat in the yield curve. But I generally say to people, of course, I have some viewers who play to the long side, and I generally say to people, once you get contango above like 5-6% where it is now, if you're going to play the long side, do it for 48. Give yourself a time limit of like 48 hours, and if it doesn't work, jump out and try something different or wait a couple days, because the decay stuff is getting a little bit bigger right about now, and eventually you're going to get punished if you stay long it for too long. Interesting tidbit is that we're about 190 days since the last all-time low in UVXY, which was around the $8.56 level. So I think we're getting closer to breaking that all-time low. And when that happens, I think there's going to be another big wave of publicity as far as UVXY and the short vol trade. We've always had a bad rap with the media, the short vol trade, and that's probably going to continue, unfortunately.
Yeah, the media kind of really ran with it. They had these terms like, what do they call the volatility feedback loop and a bunch of other things out there to kind of try to encapsulate. But there was definitely a widespread trend out there throughout most of 2017, and you can't argue it worked until February. We all knew that day was coming. I was kind of surprised at how many people were kind of caught off guard by that event in February. We had been saying it for the better part of a year here on this show. It's going to work until it doesn't. And there were a lot of funds that blew out. They got so in love with the short vol trade, going 1/8 levered ratio spreads and all sorts of other crazy things that even a first month clerk on the floor would have known. That's probably not a good idea, but they were doing it with other people's money and not around anymore. So yeah, interesting to see just how widespread that trade got. Looking at widespread vol, it's kind of erosion across the board. Looking out the commodity space out there as well, crude vol, aka the oil VIX, aka OIV, coming off a little bit again this week, at about a 26 right now, which is about 2.25 handles lower than it was last week. Gold VIX, aka GBZ, also off this week, a little bit shy of the 11 handle. That's about a half a handle lower than where it was last week. If you like commodity vol, don't worry. We got a whole bunch of it coming at you in about 45 minutes on Twifos. If you're listening live, stay tuned. After this show, we'll play a little fun stuff in the live stream for you, and then we'll come back at 1:30 Central to hit some commodity vol. In the meantime, though, we're going to hit some more of your voicemail. It is time to open up the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. This is the portion of the show where you guys take the reins. You guys ask us questions. We like to turn the tables on you every now and then as well with some questions for you guys. We asked you last week how you like to fade vol. I guess it would have been a good show to bring you on last week, Dave. We were talking all about fading volatility. We asked you your 4 favorite vehicles. Which of your favorite of these 4 which is your favorite, I should say, of these 4? We gave you short VIX futures, long VIX puts or put spreads, long VXX puts or put spreads, or short VIX calls or call spreads. Given all of our voicemail we had in comments this week, you probably guessed what won. It was long VXX puts or put spreads with 33%, followed number 2 by short VIX futures. I was surprised. People like to play close to the fire. Interesting. And then number 3, the short VIX calls or call spreads. And bringing up the rear, probably why they're so low on the top 10 in the VIX options as well, is long VIX puts or put spreads. Nobody has any love for those out there, which is kind of interesting. This week, we asked you guys kind of an interesting corollary to that for earnings season. We asked you guys, how do you guys like to play earnings volatility, quite frankly? Do you like to hold your positions through earnings announcements? That can be kind of risky. If you do you go short vol? Do you go long vol? Or do you prefer to just trade around the event itself and avoid the event? Or is earnings all too risky? So you got 4 choices. Yes, You got the short premium approach. Yes, you like to go through it, but you go to long premium approach. No, the whole thing's too risky, or I trade my vol around the event itself. Dave, you get first crack at this. First off, what is your pick? I got a feeling, since you host the short vol show, I know what your answer is. And then B, more importantly, what do you think our audience is picking?
Well, actually, if we were talking about trading earnings in a stock, I'm actually now that I'm on the retail side of things, I lay off right into earnings. I like to play that period right up until earnings with maybe a little bit of a long premium play, like right up towards earnings, and see if I get a move. And if not, then just cut it short. And not too much lost. Usually premium holds up until right before earnings, so maybe get long a little premium. If nothing happens right before earnings, then just get out. And I no longer hold through earnings. We were forced on the floor to hold through earnings, whatever position we had, and I don't want to deal with that sort of volatility anymore now that I'm a retail customer. So I stick to too risky to hold through earnings, I guess I would say on that answer.
Yeah, that's a good choice. Trading or no too risky or trading around the event. I could put you in for both because you kind of do a little bit of both. Mr. Meatball, I know how you lean. Have you changed your leaning since last time, or have you changed the way you think the audience is playing?
I'm like I said, I prefer to go up into earnings. I like those trades. I actually have some on right now. But through earnings, unless you just own a stock. And there are some through earnings plays that we do like for our kind of more advanced traders that are sometimes like long ratio spreads price really well. But that's an exception, not the rule. And I think the public would trade up to earnings, but not, through. So I guess that's the around in our poll.
Around, yeah, and around is doing well, but actually right now the winner so far, you got about a day and a half or so left, and this poll goes through into the weekend. It's short premium, trading the earnings event short premium through the event itself. So very, very close to the fire indeed. 31%. Number two, trading around the event, as you're kind of alluding to before, 25%, perhaps the more nuanced approach. Number three, saying nope, it's too risky. I can't fault you guys either. I'm not a huge trading through earnings fan myself. And number four, bringing up the rear, is long premium through the event itself. So not a lot of buyers for those for the earnings event. Speaking of buyers, more people chiming in about these VXX puts. Vixland, I must have heard us talking about him, answering his earlier question. I'll be nice. I'll give him a second shot on the show here. He's chiming in saying, instead of buying those VXX puts for a penny, why wouldn't you rather sell, he's saying here, the VXX Jan 105 calls for 0.75. Pull those up and see if those are what he's talking about here. Jan 105s all the way up. They're they're 0.71 bid. He's right. So why not sell those? That would decay those same 10 cents. So Mr. Rock Lobster, you're the guy who's owning about 20% of the OI of these puts. Are you going to turn around and blast out those VXX 105 calls at the same level? Which I got to admit, they're pretty juicy for that level.
They are. The problem with those calls are, VIX goes to 60, VXX goes to 60 again, or 50, and all of a sudden those calls are like $8. So it's always that. I think a lot of trading, so you trade for what you expect, but you manage risk for what you don't expect will happen. So from a risk management point of view, that's just never a trade I would put on just as a naked short. You're just tying up margin and everything else for a long period of time. So it doesn't mean it can't win eventually, but you have to also look at the cost and the margin and everything else for putting something like that on. So it's just, to me, there's a lot easier ways to make money faster than waiting for those things to come in.
Yeah, and they may not come in. I mean, at least not anytime soon. They were trading 2.25 about 2 weeks ago. So those things could easily, they could move 3x against you. As I know they're low delta and they're far out of the money and they're attractive because it seems juicy, but they were far juicier not too long ago. Let's see what else we've got here. Let's see, weirdest thing. This guy Beachlot chiming in with us. Beachlot saying, I agree, I'm with you guys. I like that, with these. It must be an old trader. With you guys on the story from Bloomberg from last week. They should be embarrassed writing a story on a 70K vol trade. He's totally right. We kind of joked about that. They've had a big headline story about some fund, some tiny fund, a few $1 million that they put in the headlines, made some big trade on vol. It turns out it was a $70,000 trade, so it could have been a 10 lot. I mean, just kind of pretty silly out there. So I'm with you there, Mr. or perhaps Mrs. Beachlot. We should not assume. Let's see here. BT Berg must have one coming a while ago. He's mentioning XIV. Let's see. What is the best way to trade these inverse VIX ETFs going forward? Said if I'm long a product like an XIV, obviously it's not around anymore, does it make sense to always have some VIX calls in my back pocket just in case? Doesn't that get expensive really quick? What about SPY puts? Or should I have puts, should I just have puts on the inverse ETFs in case the counterparties get cold feet? Well, I think instead of XIV, I think he meant SVXY, which is still around. But still, this interesting question, kind of just in general, product aside, what you have in your back pocket to hedge the short vol trade that I know a lot of our listeners have on. Andrew, you talked about this before. Dave, you host a short vol show. So when you're not out there, getting your shorts on UVXY and stuff, what are you doing against those positions? What do you have in your back pocket? Could be VIX calls, could be something else, go SPY puts. What do you have? What do you use as your hedge against the worst case scenario in all your short vol trades?
Well, I was a naked call seller in UVXY up until that February date, and I somehow got lucky enough to have the insight to cover them earlier in that day. But since then, I use strategies that make the delta falls off as it spikes. So, for example, I will buy put spreads or I will buy put calendar spreads now. So as a spike occurs, I'm not in a situation where I would need to get a call, somebody tapping me on the shoulder saying you need to deposit $10 million in your account or something like that. So I've been very much focusing on trades that have limited risk to them nowadays because of that spike was an eye-opener for a lot of us, and we don't want to see that happen again. I think it's perfectly reasonable, though, to buy calls. I like to do a little trick, which is on like a Thursday or Friday of the week, I'll look for some cheap call spreads in UVXY many times. For a couple pennies, I can put on something where if the worst happened on that Thursday or Friday, it would be a huge home run for me for a couple pennies. So probably like 2 days of the week, I'm like really well hedged with a couple cheap call spreads. Because remember, when you have an inverse skew like in UVXY, where the calls, the out of the money calls are skewed higher and higher, that means that the call spreads are really a good value for you. If we know that we've got contango and stuff going against us, but those call spreads can be really cheap, especially in the front week. So I will put on a front week call spread to hedge myself sometimes, out of the money call spread.
Interesting. Front weeks, you play very, 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 very near term. It's interesting. Mr. Rocklops, you touched on it before. I know you do a whole seminar on this, the VXX made easy. But if you have to think of right now your go-to back pocket hedging against a VXX short position or something along those lines, short VIX position out there, what are you playing?
Well, so the first thing with the inverse products is I always wait till the vol pops first. So the first thing you do is you take your inverse products and you take them off your screen. And you wait till VIX is 25, and then you go, okay, now I'll look at them. So you don't waste any of your time, all the fiddly-faddling around, messing with them in the first place. So that might help people to start there. The next thing is, and I'm totally with Dave on this, call spreads in VIX or VXX or UVXY are by far the best things to buy. They're super cheap, relative. Cheap dollars especially versus the decay from the products when you buy puts against them. So, and my general rule is you want to be short vol long term, and you want to be long vol very short term, meaning you don't want to spend huge money for the short term stuff. So I think that's the right way to do it. It's just the way we do it in the fund. That's the way I teach it in the class. That's the way I trade it myself. And I'm just looking for times when, like, the risk reward between a very short term long vol trade looks really appetizing toward a kind of a more mid to long term short vol trade. And then you kind of put on these little back spreads, and most of the time they pay a little bit, and then every once in a while one side kicks in enormously hard and they pay a ton. So it takes a little bit of education on a strategy like that, but that's how I like to do it. So, I mean, SVXY right now is so useless. I mean, you could buy one VXX call and probably hedge the entire underlying. So it's, or the underlying 3 times because it doesn't move anymore. So like I said, and wait till the VIX is 25 or over 20, like zone 4, and then bother with looking at an inverse product. And it'll just keep you from wasting your time basically right now.
And what doesn't waste our time is actually the scariest, the most dangerous part of the show. Yes, it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we attempt to wrestle that slippery VIX pig to the ground and attempt to predict where the heck it's going to be this time next week at the end of our show. Mr. Rocklaps, I believe you had some disparaging comments to make about my VIX prognostication skills of late, but I don't recall you having any bullseyes on the show anytime soon. And what's that? Oh, did I just look again? And did I just pick 12.5 last week? Yes, I did. And where are we right now? Oh, I just ticked down. I was at 12.47, so I was literally 0.03 away. Now we're at 12.45, so 0.05 away. But still, our rules are, if it's within a tenth of a point, that's effectively a bullseye, sir. So there you go, in your face, another bullseye for me. So Dave, I apologize. This is usually a portion of the show where I let the guest go first, but when I get a bullseye, I kind of have to go first. It's kind of required by law, if for no other reason than just to rub the Rock Lobster's face in it again. But yeah, looking at where we're looking next week, we've been talking about kind of the slow erosion kicking in. We could see some trade war pops come in from a vol perspective, but as we've seen before, they've all been kind of short-lived for the most part. So I'm going to say this time next week, coming into the weekend, I'm going to see, I don't think we're going to have, 11 handle. What am I feeling here? I'm going to say lower, but not size lower. I'm going to say 12.20 this time next week. All right, and there you go. Since Andrew was so rude, Mr. Dave, you get to go next as our guest. A dubious honor if ever there was any. Where do you think VIX is going to be this time next week, sir?
All right. Well, I'm just going to stick with the trend being my friend here and get a little aggressive and say 11.99. I don't know is that aggressive or not. That's just down a few 50 cents. 11.99.
We've seen crazier. When Russell was on the show, he used to pick 10 handles north every week. So it's aggressive, I guess, is up to the eye of the beholder. So 11.99. Oh, I put 1.99. That would certainly be a very aggressive pick. 1.99. 11.99. Okay, so he's getting me a little bit on the downside. Mr. Rock Lobster, all that smack talk at the beginning of the show, you better bring your A game, sir. What you got?
I'm looking. He said I'm going to stick with my original. I'd be happy with 12.25 by Friday. So that's where I am.
Are you honestly going to give me by a nickel? Is that what you're going to do to me? Are you? See, that's how you're turning to win now. Is you're just nickeling me. That's what you're that guy. I'm just
going to go with the guy who's got all the game, and I'm going to nickel him. That's what I'm going to do.
You're going to stand next to me or adjacent to me by a nickel. That's going to be you. So there you go. That's how you're going to win the game, by just annoying me to death. I see what you got going on. All right, that's our guesses. What are your guesses for where VIX will be next week? It's not just us humiliating ourselves here on the show. You guys get to play along too. So hit us up if you guys have some thoughts. Maybe we'll read out some fun ones on the show next week. But that music means, unfortunately, we are done, at least for this show. Again, if you're listening live, stay tuned after this. We'll pump some fun shows in there for you. And then we'll be back at 1:30 for a little bit of TWIFO, talking some commodity vol action, crude, gold, some equities are there as well. So we'll talk Russell and a bunch of fun stuff, RVX, so stay tuned for that. But before we go, let's go back around the horn. Dave, as our guest, we'll start with you. If folks are intrigued by the Short Vol show and what it is you're doing over there, where should they go? What should they do?
Yeah, just hit me up on YouTube at David Lincoln or at the famous Dave on Twitter. And we'll be excited to have you join us. I'm pretty much daily on YouTube every morning around 8:30. So check me out there.
And by the way, it's famous FAMIS, not OUS, not the normal spelling. It's got to be a little avant-garde in his spelling. By the way, is that Benny Hill as your Twitter icon?
That is Benny Hill.
I love that.
Nice.
You get points for that. I loved me some Benny Hill back in the day. So that's anytime you get a Benny Hill icon, you get that alone has earned you a repeat appearance on the show. How does that sound?
Oh, great.
There you go. Gotta spread the Benny Hill love around. Much bemoaned Benny Hill. Mr. Andrew, I know you don't go in for such things as lewd British comedies. So instead, what's cooking in the land of the pit, sir?
What's cooking in the land of the pit is we are going to do repairing broken trades. Repairing broken trades on Sunday, the 29th of July. So for how to set up trades properly, but also how to fix and manage short gamma position trades. So probably the most useful, it'll be all of our mentors will be doing it. Probably the best show we've done, the best Saturday class, but it'll be on a Sunday that we've done so far.
There you go. 3.5 hours of the Rock Lobster. If you didn't get enough of them today, you want to buckle in. By the way, you do get a couple bathroom breaks in there, so it's not just 3.5 hours of mainlining. So I did ask them on your behalf that very question. Head on over to optionpit.com to learn more. And on behalf of the famous Dave and the Greasy Meatball, or I should say, the Rock Lobster, I get my own nicknames confused here, and indeed myself. I want to thank all of you out there for downloading, streaming, and subscribing, for listening live. Stay tuned. You'll hear some fun stuff, maybe about some Netflix earning trades and stuff. We'll be back in about half an hour to talk all things TWIFO. Otherwise, we'll see you next week for more Volatility Views.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.